Which markets do you think are most vulnerable to what's going on right now? And are there any markets that you think are particularly resilient?
Yeah, the markets that are vulnerable are the ones with the most outside capital and most investor and home building capital entering them. So what I want your viewers to think about is the more home building there is in a market, the more vulnerable it is, because that's going to increase supply and inventory. The more investor demand in a market, the more vulnerable it is to a decline in price, because it means that prices were juiced up by external capital. So I would caution everyone right now, be very careful. If you're in a city where there's a lot of home building and a lot of investor demand, where prices have spiked during the pandemic, where people are spinning narratives like, everyone is moving here, prices are going to go down forever, those prices are going to go up forever, those are exactly the type of cities to avoid right now. They're going to have the biggest decline in values. But there's other cities in America that are kind of the opposite, that are more of the stable, steady Eddie cities, often in the Midwest and Northeast. They're a better buy right now. I think values there will correct, but not by nearly as much.
All right, that's a great way to look at it. And that gets to one of the next questions I had for you, which is about sort of institutional and investor ownership of real estate, of housing, housing stock. That's something relatively new that we're seeing in this cycle, as we've seen a lot of institutional money flow into the residential housing market. And it used to be sort of mom and pop landlords, and they're still in the mix there, but we've seen a lot of iBuyers, like the Zillows of the world going in and buying a bunch, or we've seen big hedge funds like Blackstone come in and buy really substantial amounts. And I'm curious, what effect do you think that's going to have in this correction? I think you could make an argument on one side that, hey, these are deep-pocketed investors, and they're going to be able to, withstand greater price declines than the average, homeowner. But then you also, on the other side, can make the argument that, hey, these are the loosest hands in the inventory, that when people start getting into trouble, or big funds start getting into trouble, they're just going to dump inventory because they don't live there. They're not living in the house. They're just looking at the bottom line. And obviously, if they dump inventory, that could accelerate price declines. So what's your take on institutional ownership?
Well, it's a great analysis you just did, Adam. And I've heard people make arguments from both perspectives, but I'm more sympathetic to the latter one, that these institutional investors are going to cause home prices to go down by even more, because we're already seeing this happen. Very important that people understand, we are already seeing investors bail on the housing market. Again, to use an example like Phoenix, Opendoor, the biggest home flipper and iBuyer in America, they are now cutting prices on their homes in Phoenix by up to 10 to 15% from what they bought them for 3 to 4 months ago. So Opendoor's taking, in some cases, a 15% loss on homes.
So they're just trying to stop the leveraging. That's all they have in their mind.
Right. And you read their earnings reports, their CEO is very clear in saying, oh, we're now going to slow our purchases into the future, and then we're going to cut prices on our existing inventory to get it off the books. And that's happening only like 3 months into this downturn. They are already backing off. Their confidence in the housing market and their business plan is already tanking. Now, many of these investors are saying to themselves, oh, this is just a short-term dip. So they're, the way they're spinning it is like, oh, we're going to position ourselves more for the future. 6 to 12 months from now, we're going to buy the dip. We're going to be in a great situation. And then prices are going to keep going up. But there's a big problem in many of these markets. And that's because, especially the corporate landlords who don't just flip homes, but they rent them out, we are, in my opinion, going to see a collapse in the rental market in America over the next 6 to 12 months, which is going to make not only, like our home value is going to go down for these investors, their cash flows are going to start going down, because tenants cannot afford the rent in America. And we're already seeing now a huge surge in evictions in certain cities. We're already seeing apartment occupancies decline. And that's the variable that's going to really push, in my opinion, investors to sell and liquidate over the next year, is as this rental market in America declines.
All right, so I'm sure you just piqued the interest of every renter who's watching right now. So help me understand how that plays out. What's going to cause the rents to go down? Is it because prices are going to get low enough that renters can say, okay, I finally can own my own house, and screw you, landlord, I'm going to switch to my place, and landlords just start seeing flight of tenants? Or is there some other dynamic in play?
It's going to be mainly through lease defaults, as well as kind of the expiration of the eviction moratoriums and all the government stimulus into the rental market during the pandemic. They caused rents to go up like way higher than they should have. For instance, in Miami, over the last 2 years, the typical rent's gone up 48% in 2 years in Miami. Absolutely crazy. Meanwhile, the average wage in Miami, according to the BLS, has only gone up, I think it's something like 9%. So rents in Miami have gone up 5 times faster than wages over the last 2 years, which is not a sustainable situation, much like home prices and mortgage payments going up way faster than wages. So the outcome that we are already starting to see in a place like Florida is record levels of evictions now occurring in certain cities across Florida, as well as much of the Sun Belt. And so don't be surprised if this housing crash, there's going to be foreclosures like I talked about before, but this is also going to be an eviction-induced housing crash where we're going to see apartment vacancies skyrocket. And as those apartment vacancies skyrocket, the rents are going to go down and the cash flow collections for these landlords is going to go down as well.
Okay, and sorry, I'm doing this more just for my own curiosity, but if people aren't leaving to buy a home, where are they going? Are they just moving to a lower price, city, and renting again there? Are they doubling up with family? Those bodies have to go somewhere if they, default on their lease.
Yeah, so we're already starting to see huge huge household consolidation, which is basically when, like you said, family members or friends move in with each other. We had a huge surge in people living alone over the last 3 to 4 years as this economic expansion surged and the number of households being formed in America surged. Well, we're already seeing now not just a slowdown in household formation, but I think we're seeing a reduction in the number of households and occupied housing units, which comes, like you said, I'm going to move in with my parents, or I'm going to move in with my friend. And a very interesting metric that we're seeing real time in the apartment market right now is a company called RealPage, who has software for 11 million apartment units in America. They're reporting that the number of people doing apartment tours and applying for leases has plummeted over the last 12 months, which is funny, because you would think, as fewer people are buying homes, you would think more people would apply for apartments and move in, but we're seeing the opposite. So that suggests there's an overall consolidation in the number of households, and essentially Americans are going to be consuming less real estate into the future.
All right, fascinating. So one other related topic. So I've heard that, a dynamic over the past bunch of years, recent years, has been that boomers haven't been selling their homes the way in which a lot of the demographers thought they would, right? You get to an older age, you downsize to a smaller home, or you go off to a senior living facility, you sell your home. A lot of boomers have held on to their homes. And the reason why is because they kept appreciating. So they treated it like a stock in their portfolio. Oh man, this home goes up 10+% every year, right? Maybe a number of them also, they downsized, right? But they held on to the home, and maybe they put it on Airbnb and it became, an income generator for them. I assume those homes have got to be some of the first to go as times begin to get tight for people, right? It's not a home these people are living in. They knew they were going to sell it anyways. Maybe the Airbnb rentals are drying up. And also, there's sort of a first mover advantage to all this too, right? The people who sell earliest, they don't hang on and watch the price just continue to go down. So how much of a factor could this be?
Huge. And what you're essentially commenting on there is that a huge share of the US housing stock is owned by people for discretionary purposes, whether it be a vacation home, a second home, an investor home. More and more of the ownership in the housing market is among people who don't actually live in the home, which, like you said, can push home prices up during the bubble. But as home prices go down, it's going to be very easy for a lot of people in the housing market to sell because they don't live there. They don't rely on that house as a place to live. So I think you're spot on as far as that goes. And there's certain markets that are most exposed to this. One is Florida. I mean, I am very bearish on Florida's housing market in the long term because just a huge level of that housing stock is owned by people who don't live there. And if, they lose their job, or maybe if their 401k or retirement goes way down, they're going to be looking at that house as the savior for them, selling it so they can raise cash.
If you enjoyed this video clip, click here to watch another one you should like.